The Silver Surge, a comprehensive investor's guide to SLVR, Sprott Silver Miners and Physical Silver ETF. As we move through January 2026, the global financial landscape is shifting. Investors are increasingly looking beyond traditional tech toward real assets that offer protection against inflation and geopolitical instability. One of the most talked about tickers in this space is SLVR, Sprott Silver Miners and Physical Silver ETF. Launched on January 14, 2025, SLVR has quickly become a cornerstone for investors wanting pure-play access to the silver market. Unlike other funds that only hold metal or only hold mining stocks, SLVR combines both into a single powerhouse portfolio. Before you decide to invest, it is vital to understand the silver renaissance occurring in 2026, the specific structure of this ETF, and the unique risks of the precious metal sector. 1. What is SLVR? The pure play philosophy. Most silver ETFs force you to choose. Do you want to track the daily price of silver bullion, the metal itself, or do you want to bet on the companies that dig it out of the ground, the miners? SLVR is unique because it does both. Managed by Sprott Asset Management, one of the most respected names in precious metals, the fund follows the Nasdaq Sprott Silver Miners Index. The portfolio mix: physical silver, approximately 17.5% to 20%. The fund holds silver bullion, often via the Sprott Physical Silver Trust, PSLV, to provide a floor of stability tied directly to the spot price. Silver miners, approximately 80%. The remainder is invested in over 65 companies involved in silver production, development, and exploration. This hybrid approach allows you to benefit from the steady rise of silver prices while also gaining leverage from mining stocks, which often rise much faster than the metal during a bull market. 2. The 2026 context: why silver is exploding now. As of January 16, 2026, silver has hit fresh record highs, trading near $65 to $67 per ounce, with some analysts forecasting moves toward $90 plus. While gold often gets the headlines, silver is currently outperforming its yellow sibling. A. The industrial engine. Silver is a critical industrial metal. In 2026, demand is driven by the solar energy and AI infrastructure booms. Every solar panel requires silver for its conductive paste, and the massive data centers built for AI rely on silver-coated connectors for high-speed data transmission. Solar industry demand alone is growing at roughly 14% per year. B. Monetary hedge. With concerns over global debt reaching new heights in 2026, investors are treating silver as a form of honest money. The gold-silver ratio has recently compressed toward 50 to 60 times, down from historical highs of 90 times, signaling that silver is finally catching up to gold's value. C. The fifth year of deficit. We are entering the fifth consecutive year of a structural supply deficit. Mine supply is stagnant because most silver is a byproduct of mining other metals like copper and zinc. With demand rising and supply physically unable to keep up, the price floor remains incredibly firm. 3. Performance and key data, early 2026. SLVR has been one of the standout performers of the past year. Let's look at the hard numbers as of January 16, 2026. Market price, approximately $65.98. 52-week range, $19.66 to $67.08. Return since inception, over 178% NAV return. Annualized dividend, approximately $2.05, distributed annually. Current yield, 3.18%, unusually high for a precious metals fund. Expense ratio, 0.65%, the management fee. Net assets, assets under management, over $813 million. A 178% return in its first year of operation has made SLVR a favorite for momentum traders, while the 3.18% dividend yield provides a rare income stream for a commodities-focused investment. 4. What's inside the fund? Top holdings. When you buy SLVR, you aren't just buying silver, you are buying a slice of the global mining industry. The ETF is non-diversified, meaning it is heavily concentrated in its top players. By holding a mix of producers, who make money today, and explorers, who search for new deposits, SLVR covers the entire lifecycle of the metal. 5. The risks. It's not all glitz and glamour. 1. Extreme volatility. Silver is famous for its wild rides. In 2025-2026, we have seen silver jump 10% in a week, only to drop sharply the next. 2. Operational risk. A strike at a mine in Mexico or a tax change in Peru can cause a mining stock to crash even if the price of silver is going up. 3. Concentration risk. SLVR is focused only on silver. If the silver sector enters a bear market, this ETF will fall hard, regardless of how the rest of the economy is doing. 6. Investment strategy. How to approach SLVR. If you are looking to start an investment in SLVR, consider these tips for 2026. The satellite approach.
Most experts suggest allocating 5 to 10% of your portfolio to silver. It acts as insurance. When the stock market crashes due to inflation, silver often rises. Watch the spread. Because SLVR is specialized, it has a 30-day bid-ask spread of 0.32%. To get the best price, use limit orders rather than market orders. Tax efficiency. Holding silver via an ETF can have different tax implications than physical coins. SLVR distributes dividends annually, which are typically treated as qualified dividends. Conclusion: the silver century. In 2026, the case for silver is stronger than it has been in decades. SLVR is currently the premier vehicle for this trade, offering a complete solution, combining physical metal with the high-octane growth of world-class miners. With $1.5 billion flowing into Sprott's physical funds and SLVR's AUM nearing $1 billion, the liquidity is improving daily. For the investor who believes in the green energy transition and the need for hard assets in an uncertain world, SLVR is the horse to bet on. Just keep your seatbelt fastened. It's going to be a volatile ride to the top.